This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Hello, this is Hall Martin with Investor Connect. Today we're here with Ziad Moukheiber of Boston Harbor Angels. Ziad, thank you for joining us.
Hi, Hall. How are you?
Glad you can join us. So what was your background before investing in early stage companies? What did you do before this?
So I started right before I started my career. I have a master's from NYU, from the Tisch School of the Arts in interactive telecommunications. So it was how to use new technologies to make the world a better place. Then I went for around 18 years into IT services, and then finally landed in the world of early stage investing and never looked back. Love it.
Oh, great. And so tell us more about your angel network, the Boston Harbor Angels. I've heard of them before, but for our audience, tell us more about it.
So Boston Harbor Angels was founded around 2005. It is an angel investing group. We've been around for a while. We were ranked top 3 nationwide, and we are basically a group of angel investors, and we look at all kinds of early stage deals, and we pick the ones we like and we invest. Obviously, we have different structures and funds and vehicles. We are industry agnostic, so we invest in life sciences, all types of biotech, medical devices, digital healthcare, and then IT, and then non-IT. We just made an investment in canned wine. And so as long as we like the deals, we were in general focused on entrepreneurs. So we really have a very large portfolio of truly amazing entrepreneurs. And because we've been around for so long and had such great success, we even have repeat entrepreneurs come back after they had great success stories, and they come back to us because we have such a great relationship with them. They're actually become friends, and we really have a really nice community that we enjoy being part of.
Oh, great. So I've started angel networks myself. They were the dinner club model back in the 2000s, starting around the same time you started Boston Harbor Angels. And I've seen the industry grow and change quite a bit. How do you see the industry evolving for angel groups and angel networks?
Yeah, that's a great question because it definitely has evolved. So when the group was started by Mick Williams, who founded the group. And now I am the president and CEO. At the time, angel investing was just a group of people that wanted to help out entrepreneurs. And over the past, let's say, 20 years, the whole industry got structured. There's a trade organization called ACA. Investors become much, much more sophisticated. Check sizes grew. We are able now to do seed rounds, even sometimes A round. We can do what we call angel to exit deals, where angel groups basically fund companies all the way to the exit, where normally you expect that VC would come or multiple VCs would come to take the company further along. We also syndicate with family offices, smaller VCs. So the industry has become way more sophisticated and way more reliable. So there are hundreds of angel groups nationwide. We also collaborate with Canadian angel groups and other countries. I think the industry was at $23 billion worth of investment last year, something like that. So it truly went from helping out your neighbor, your nephew, whatever, to a standalone industry that can really make a big change.
That's great. And so where do you see it going in the future in the next 10 years? What do you think the biggest change we'll see coming up?
I think that the change is going to be in structuring the deals, because now, so angel groups and VCs are touching, right? So we in some cases work together. In some cases, we conflict a little bit. And the industry basically is evolving. Both sections are rethinking the way they invest. Angels usually, historically, they write checks, they forget them. So you get a big portfolio and you hope for some success. So now angels are thinking a little bit more like VCs, looking at more sophisticated deals, structuring them in a more sophisticated way, even in some hybrid ways, revenue sharing. And some VCs are thinking a little bit more like angels. And then you have also funds, angel funds that think like VCs but operate like angels.
Great. And so, in your job today, what's the biggest challenge you face? Is it recruiting new investors? Is it finding deal flow? Is it structuring the deal? Where do you find the biggest challenge you're struggling with?
So our group, we're lucky because of its location in Boston and because of its fame, we get really, really good deals through our deal flow and our network. The challenge for us, well, we have two challenges. So lately, the challenge has been valuations. So valuations the past, let's call it 5 years, have been going up and up and up and up. So that creates some challenges as you project forward to exit or even reverse from the exit to try to make sense of the numbers. So that's one challenge. And the other challenge is structuring the deals the right way. There's all kinds of new things. From the West Coast, we got safes. We're in Boston on the East Coast. We have the equivalent in convertible notes. You have the equity rounds. You have syndication. So there's structuring it the right way in order to have a healthy portfolio is the biggest challenge for us, because we're really lucky and blessed to have such an amazing deal flow and truly exceptional deals that come our way.
Great. And so, tell us more about your investment thesis in the IT and life science sectors. What exactly are you guys looking for, and what companies fit that thesis?
So one of our taglines is investing in people for a better world. So we always look for the truly amazing entrepreneur, and we have a formula that one of our members shared with us as an inside joke. We call it the Anmal's 5 H's, and I say hello to Anmal if he's listening. So the 5 H's are basically the criteria for entrepreneurs. You need someone who is humble. You need someone who's honest, who's hardworking, who's hungry, and who has a sense of humor. So we look for those true exceptional entrepreneurs who can actually take a company through the finish line, because obviously angels have to recirculate their funds to other deals. Otherwise, we can't keep going. And then also we look for entrepreneurs who really understand the relationship with investors, with boards, with advisors. So they understand what it means to take on investors' money, and then the multiple rounds and the whole process. So once we have that type of entrepreneur, then we look for a deal that's structured in a way we're comfortable with. We always say number one, we invest in companies, not in projects. We invest on the life science side, we invest in companies, not in science projects. On the non-science, on the IT or the products, we don't invest in products, we invest in companies. So you have to have some type of a structure, possibly a board. We like to have a team. Most companies have 2 co-founders. And then also we like big markets. We like also, obviously, like everybody else, disruptive technologies. One question we always ask is, how does your company make the world a better place? Because that's fundamentally what we want to do is make the world a better place through our investments. And so we love all the startups we invest in that are, you name it, we have cancer treatments. Now we just made an investment in a company called CytoAgents. They have a treatment for COVID. The list goes on the types of companies we invest in. And we're really proud of all the entrepreneurs that we support.
And can you mention one or two companies that fit that thesis? You've talked about a few already, but maybe you can talk about others.
Oh, absolutely. So, in fact, we just published on our LinkedIn our 2020 Entrepreneurs to Watch. So let me go through a short list. So Astrocyte Pharmaceuticals is a neuroscience company led by a fantastic entrepreneur, Bill Korniak. We have, I mentioned the canned wine company called treacherous. They're changing the world of the wine with wines in cans, which is better for the environment, more equitable agriculture. We have one of our superstars, a company called Wasabi Technologies, completely disrupting the world of cloud storage. We have, like I mentioned, cytoagents in the world of COVID. We have Axtin Pharmaceutical in the world of diabetes. We have Anubis Bio in dog and vet healthcare. And the list goes on and on and on.
Great. And so do you have a fund? Is it a sidecar fund or do you have a fund at all?
Yes. So the way we operate, and now things are changing. In the past 2 years, the group has evolved. So we have our membership. That's what you can invest directly. We also now opened up membership nationwide because we have a lot of people from around the country that want to join our group. We're a fairly small group, so we're very, in order to be accepted, it's a fairly tedious process. But because of remote access and all that, so we're opening up membership nationwide. We have different vehicles we use. And we also now launched 2 years ago a fund called EQX Fund. And the EQX Fund is now the fund that is attached to our group that also co-invests. It's not a pure sidecar fund, but we have a partnership with EQX. We also have other members or funds that are part of our group as a membership. And we have also family offices and things like that. And so because our goal is always find the best deals for our members and to help the companies.
So what excites you right now in this great new world of post-COVID?
So I love I'm a purist in terms of entrepreneurship. So I love to see how entrepreneurs are handling COVID because entrepreneurship is not easy. No one has ever said it was going to be easy. Now, COVID made it amazingly difficult. And if you can survive COVID, you can survive anything. And we have companies that are doing really well. Some because their industry is doing well. It's a good, like COVID really boosted their industry. And some is just they're navigating it really beautifully. To mention Wasabi, one of our great portfolio companies, they just closed a month and a half ago, I believe, a $30 million round. And some companies are doing really well. And it's a true pleasure to help entrepreneurs during this time, to help them creatively, and also to see them really be creative in how they survive this period. Because this is entrepreneurship. As they say, the tourist entrepreneur is going to have a hard time these days. Also, the funding structures have changed, the funding risks have changed, and so on.
Well, great. Well, you see quite a few investors and startups in this space and what you do. What's your advice for people investing in startups? What do you tell them to do before they write that first check?
Before they write their first check, I always say, just take a step back. Whenever we have a new member, I usually have 1 or 2 meetings with a new member to explain, as long as if they are sophisticated investors, they've done it before, they know what they're up against, because our meetings are very exciting. And most people, once they attend the first meeting, they're ready to write checks. And I tell them, look, take your time. Number 1, understand the mechanics. So you understand at what stage you're investing, because now we're looking at a lot of early stage deal, but we're also now accepting some later stage, where I tell them to understand the different investment vehicles. I also urge them to think in a portfolio fashion. Because good things could happen to bad companies, as they say, and bad things could happen to good companies. You can never predict what really is going to happen to one particular company. So you really need to have a portfolio, so there's some type of diversification you can do in terms of earlier stage, later stage. You can look at some companies whose revenues who are a bit de-risked or funding risk. Have a portfolio approach to angel investing, and then also spend time with the entrepreneurs to get to know them, because these are the people you're going to support for many years, and they're going to need your help. Even though we urge people not to waste entrepreneurs' time, right? If you're an investor, that doesn't mean you're a great advisor. And don't get excited. Most angel investors, in a funny way, they always regret their first 2 to 3 investments. And because they rush, they get excited, they follow the wrong crowd, or they follow the wrong people, or they get enamored by the first 2, 3 deals. So I tell them also, keep your check size limited your first 2, 3 investments until you get the hang of things. And then pace yourself. That's another advice we've had from some sophisticated investors who've done it for many, many years. You have to have a plan as an investor. You should say, okay, I plan to invest 2 or 3 deals per year, and then stay on pace, be patient. We have such an amazing deal flow that we keep telling our members there's always another bus. If there's any doubt on a particular company, take your time and pace yourself. Also, keep that opportunistic funding source, because you could have great deals, and then one day you have an amazing deal that shows up. We've had one deal that was funded in the room on a show of hands, maximize the whole allocation that day. And so you always say every year, it's like one more. And if let's say your spouse is your checks and balance, or you have someone, or you have a bunch of friends where you say, okay, well, I'm going to pace myself, or have someone vote with me to say, okay, are we going to invest? And then you end up saying, okay, one more. It's addictive. I've had many members come to me and say, this year I'm only going to do 3. And then by the end of the year, they've done 5. And it's like, yeah, I couldn't pass out. This was such a great company, or great entrepreneur.
Well, that's great. That's great. So on the other side of that table, what do you tell startups to do before they go out to raise that first investment round?
And I do a lot of coaching, mentoring. That's probably one of my favorite things to do, is to help the startups, the entrepreneur. I tell them, number one, take your time and get to know the industry. So attend meetings. We allow guests to our meetings. So whenever we have startups we're mentoring, or friends, we tell them, come sit on a meeting. It's virtual lately, but you can just sit and watch. Then understand the mechanics. Like as an entrepreneur, you have to understand what you're doing. Are you doing a convertible note? Are you doing an equity round? Do you need a board? All those pieces. Once you understand all these, then the main goal, you have to look at your funding sources. Okay, are you going to pitch to angel groups, angel individuals, family offices? How are you going to find them? And in most of the time, they have to syndicate. And so the industry standard is having a champion makes all the difference. So you have to take your time until you have a champion inside the group to help you navigate the process. And it's a tedious process. It's not easy, and it shouldn't be easy, because we're not here just waiting for people to give them checks. We're here to find the best companies. And people who don't like to fundraise are in the wrong business. Oftentimes, some companies have 2 co-founders, which makes it life easy. One runs the business and one does the fundraising, which is almost a full-time job at different levels. And then have what I call empathy, entrepreneurial empathy. Try to understand the investors. Don't always think they're sitting there waiting to write checks. Understand they have other deals. Understand that they're very, very busy. They get swamped. And you have to understand what they like. Don't go to a medical angel group and try to pitch something non-medical. You're wasting your time. Don't go to a very early group and pitch a later stage deal. Every group has different sensitivities, and it takes time to understand the different groups and how they operate. We're all friends. All the angel groups know one another. We're Boston Harbor. We syndicate with so many on the East Coast and the West Coast. Don't try to hide information from one because it comes out in 2 seconds if you've been turned down by a group and you don't mention it. And then finally, the pitch. Don't make a pitch that's 17 hours long, just 10, 12 slides to the point. I always say a pitch presentation is done when you're done taking information out of it. And finally, know your audience. Don't pitch a highly scientific pitch to a room that does not have many scientific people in the room. Make it simpler and tell a story. We love stories. I always say the shortest distance between an entrepreneur and an investor is a story. So tell us a story so we remember you after we've seen all these startups, and then work your way through the process. Don't try to close quickly we've had situations where people pitch and say, okay, who's interested? No one's going to write you a check right there. It's a process. Understand due diligence. Be prepared ahead of time. Have your information ready, your deal room ready, so you answer questions as they come up.
Well, that's great advice for both the investor and the startup. In the last few minutes that we have here, what else should we cover that we haven't?
Well, what we really love is making the world a better place, truly one investment at a time. So we're here to partner with startups to make a difference, to cure diseases, to make things more efficient, to reduce pollution, to improve everything and everyone. And I hope that startups understand the role of angel investors. It's called angel for a reason because we're here to help. We're not VCs. Some people call themselves seed investors as well. But we're here to find amazing companies that can be successful and, as they say, doing well by doing good. And so on my side, the biggest announcement is that we're really going national as a group. We're accepting memberships from outside. Basically, we've been more New England. We've had members a bit farther, but now we're really opening up membership nationwide. And then our EQX fund, we're done with Fund 1, and now we're launching Fund 2. That's very exciting as well.
Well, great. And so I assume those meetings will be online in most cases, or do people travel to Boston from wherever they are?
Well, it depends. Well, during COVID, we're online. Once, hopefully, COVID ends soon, it's going to be a hybrid between all these. It depends if you're just an LP in the fund or you're part of the group or you have access to all our deals. It's going to be a hybrid.
I see. Well, that's great. It sounds like you have a great brand and a great track record and a great history there. Looking forward to seeing how it expands in the next 10 years as I guess the successful angel groups will be able to attract members from across the country. So how best for listeners to get back in touch with you?
Easiest way is through LinkedIn. And I tell people, please, no more than 3 lines for emails. LinkedIn, also go through our website. Make it short. Long এবং we don't read them.
It's not necessary for sure. Just like the pitches, the shorter the better.
Short and sweet. We tend to really read every message, every email. We make it a point to review every deal that comes through our website, and we get a lot of them. And so being long-winded is not necessary.
Well, we'll put those contact details in the show notes so people can get back in touch with you. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you, Hal. This was a pleasure.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org.
Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.